Happy Monday, everyone. Hello and welcome. I hope you had a fantastic weekend. Today is the 4th of October, 5 minutes to 11 o'clock local time, and I would like to go through the other financial markets as I like to do from time to time every few weeks. Also watch the last video in case you haven't seen it. So many predictions came true there again, even though, as you know, we are mostly looking at purely technical, fundamental, longer time frame considerations, because obviously it's all about the dumb money moves and the smart money responses in forex. In other markets it's also the case, but for example, when I look at metals, as you can see from the metal charts you get on the MK web, they do position hunts, they do stop hunts. However, there's also a bigger role of fundamentals. I would think around 30% of the influence is fundamental. Anyway, so let's go through the charts so we have a general impression. Let's start with stocks, equities. This is S&P 500, 4,326. For the first time after this massive bull market, we have a break of the trend line, as you can see from the last video. This is important to see. So I said if there are just pullbacks from the trend line, it's not meaningful. So something is happening here, some kind of turn in the market. Here you see the V from of the stock market from last year, the big crash down to 2,152 level, just above, and then the massive bull market straight up in a tight channel. I mean, look at that. This is a result of central bank activities. Okay, and also of course we have the effects of the crisis, which benefited many listed companies while it damaged most of the unlisted companies. Okay, so keep that in mind. Something's happening, as we know, and we will look at the euro-dollar long-term chart in a minute. This means that we can enter a new market phase. If you look at the British market, the FTSE 100, it hasn't done the same impressive bull market overall, but it has recovered from the big low. Yeah. So down here from the 4,822 level, it recovered. It did a steep pullback, but now it's at 6,999. So we are on the upper side of this range here, and the price in the short term looks also a little bit bearish there, as you can see, some kind of dirty head and shoulders pattern. When we look at single stocks, you know, I like to look at some stocks which are representing parts of the economy. For example, Amazon. The charts are more messy, like here on the forward chart. But you can see, so they did this little dirty uptrend from this support level and now are coming back down. Apple took the lows, 142. JP Morgan a bit more bullish, like some other financials. So just, you know, tested the low here and then did an up move. Okay, so just keep that in mind. I like to look at those markets just to have a general idea what's going on. But obviously all these markets are way smaller than Forex. As I predicted in the last video, oil fundamentally, technically rather bullish, 75.57 now here, the WTI. It can fundamentally increase, but I've taken profits there. I'm not doing another trade there right now, unless of course I may get a pullback. Bitcoin after, okay, let's go to the longer term chart actually. You remember I said if we have an attack of the high, it looks bullish. We had the big correction here down all the way here to the 28,900 level. those 3 lows, and then a recovery move to the 52,861. Then a normalization move down, and now we have this attack. I believe that if Bitcoin will attack the 50k level and break it, that there's a high chance that there's gonna be an attack of the high. If the high gets attacked, there is a high chance that we're gonna see a nice bull market for some years, for example. That's my theory. I don't think that at this stage cryptos will disappear, even though China recently announced that Bitcoin will be illegal, and they probably try to push their own coins. But I think like the 3 big ones like Bitcoin, Ethereum, Cardano, unlikely that they just disappear, and there's a reasonable chance that they go for a bull market in the next 5 years. Remember, I do not recommend anyone to short-term trade cryptos. It's a gamble. It will not work. Don't trade it on margin. If you want to buy the physical coins and leave them for 5, 6, 7 years, that you can do, and you can place a certain percentage of your net worth in this and just hodl, buy and hold, okay? You can't do the same now with the stock market because it's very high. You don't want to just buy and hold when the thing potentially turns all the way down. But even though crypto can be influenced by a down move in equities, in a longer time frame, I see this whole development still in the beginning stages, you know? We're talking about the financial revolution here. I've talked about it before. And there's still a lot of potential. Obviously, in the short term, you see it can get stuck in some consolidation. Okay, if it doesn't manage to break this consolidation zone, can go flat. We know the game. Anyways, again, this is just to give you a general idea. Do not short-term trade it. Okay, this is a sucker's game. Let's move on. Gold. I've shown you last time on the day chart. You see this triangle, and it's still there. We had the stop hunt here below the low, but we're gonna come to this inflection point here. Short-term bearish. Maybe at some point, once it has reached the inflection point, it will do a breakout, either up or down. We wait for the dumb money to make a decision. Check the charts on the MK web with the dumb money and stops. Silver similar, has some kind of triangle pattern. Did a stop hunt below the lows, 22.4. It will either recover and attack the highs, but if too many longies come in, it will do a breakout to the downside. Yeah, so check the charts. Do not because on the metals you can use our data. Just try to look at the longer, the higher time frame, so to speak, and also incorporate a little bit of fundamentals. Okay, so let's look at euro dollar day chart. We had this beautiful down move, as you know, with many trades here against the dumb money longies. This market was full of longies. We traded short over 2 weeks and made great pips. Now, as you can see, we have cleaned the lows from 2020. So we have to be careful. The market can snap. Okay, we are out of the range in the short term. So keep that chart in mind as well. Yeah, and once the prices have normalized a bit, we will again get a phase of beautiful trades. But this phase now is more tricky, more difficult than the phase before of the last 2 weeks, yes? That's something you can already say just from this information. The easy trades were in the last 2 weeks, where we could sell against the dumb money longies again and again and again and again over weeks. Now those lows have been cleaned, many stops have been taken, markets can snap. So this market phase now is tricky. Remember that. Cable even more extreme. Look, it took those lows, 1.357, also against the longies, but what happens next will depend on the dumb money flow. So be careful. Cable is tricky now. Dollar yen. Let's even look at the week chart here. Look at that. Dollar yen, very whipsaw price action. Had this stop hunt, remember, in 2020, taking all those lows and stops, boom, in one go. Remember that. Now it broke this trend line here with this recent up move. And remember, with a massive down money squeeze against the shorties here, which is why it moved up. I can show you that actually again. Well, just watch the other view. But you remember we had shorties coming in the market, and this was the result, yes? So this is basically the overall market overview. I do that just to have some orientation. Obviously, we do not place trades on a simple analysis like this. We place trades based on the market structure. Yeah. Let me just move this. Let me just show you euro dollar. We had those beautiful down moves. Okay, now as we speak, it took out the upper stop. Okay, in the short term, maybe it goes down and takes a stop, but the market is very sensitive to shorties. Keep that in mind. If a little bit of shorties come in, they can make an exaggerated move up and do some kind of gray pattern move, etc. Yeah. So don't trade as big as you did the last 2 weeks. Simple rules like this can massively improve your trading. Position sizing is key. Easy money, more leverage. Difficult, tricky market, less leverage. Follow those easy rules, yeah? Such as today, slow Monday, low the money flow, low news flow, post stop on scenario, tricky market, be careful. Don't just, trade or say it needs to go down to the low or something. You understand? Keep your trade small and trade less on those days. On easy days, trade higher and get those pips. If you follow the simple rule, you become a really good trader. It's not rocket science. And the market causality enables you to decide when is an easy day, when is a difficult day. This alone is amazing. You see here, cable, boom, with the longies, we short it down. Beautiful trade, easy pips. Now some kind of down money switch. We did a scalp here, now the money switch. Whether it takes those stops here, which probably happens at some point, you can't trade it with the same amount of leverage like we traded the last 2 weeks, obviously, yes? Yeah. Also show you, just because I see it right now here, just show you dollar cuts here. As expected, went all the way down against the longies. Will maybe even go for those short-term stops. But even that trade is maybe tradable, but you can't put as much leverage as before, yes? Differentiate. A trade is not a trade. A setup is not a setup. Here we see euro pound. Look, went up against the shorties and went down against the longies. Pretty neutral. Can go either way from here. Can go for the lower stops, which seems more likely right now. Looks a little bit bearish. But be selective, okay? Make analysis and be adaptive. Most people struggle with that. That forex short-term trading requires you to be very adaptive. There are phases where you can pull the trigger. There are phases where you have to really do nothing. And people struggle with that. People have the feeling they need to do something every day, and that kills them in trading quickly. You need to be adaptive. The market is fast, the market is slow. You adapt to that with your trade approach. That's, by the way, also why all these static expert advisors and trading robots fail if they are too simplistic. They can't deal with those different market phases. They do well in the phase. If the phase changes, they die. Manual traders are often like that too, because they think they can do one particular thing and it works all the time. It doesn't. As a manual trader, you need to be adaptive. But if you have access to the MK web, you see it in front of your eyes. All you have to do is control your emotions. It's a massive, massive help in your trading. If you see a naked chart, you don't really know what's going on. You don't know where the longies are. You don't know where the shorties are. You don't know where the medium and short-term stops are. You don't know anything. You're blind. So how can you decide whether it's an easy phase or difficult phase or slow phase or fast phase or easy pips against a position hunt towards the stops or more tricky? You don't. You're completely blind. That's why people fail. But if you have access to this here, you still need to follow those general rules. Yes, it's necessary, and that's the key to successful trading. Because if you don't do that, what happens? Like a slow day like today, you sit there, you think, oh, I need to play some trades. You place a trade and it goes too far against you, So what happens? You may have made good money last week and then in one or two stupid trades you give back a big chunk of that. That doesn't make sense. Rather trade small or don't trade at all, and wait for the next opportunities which are easy. And then you can also go aggressive, you see. That puristic approach will help you much more than trying to do something where there's nothing to do. The higher the bias, the more you can risk. The lower the bias, the less you can risk. If there's only a slight bias in the trade, in the market, maybe you can trade it, but you have to use less leverage because it's not worth much. Every setup has a value. The higher the value, the more leverage you can use. The lower the value, the less leverage you can use. And we can even show you that in terms of numbers. If you see the market is full of longies and the stops are below the low, you can sell. But if there's a mix, there's some longies, some shorties, there's a range, the market is overstretched or conflicting news and so on, when things get too complex, don't just say, they're a little bit more than longies, so I sell. Often it goes the other way then, because there's dumb money tolerance. Remember that. It will exploit the dumb money tolerance. It will actually go up and then down just to take out short-term stops. You've seen it many times now. Anyways, okay, so that was a general overview. Thanks for your time. Understand that we're now in a more tricky market phase. Trade smaller, trade less. Adios.